in a first version of our product, we'll just have an easy interface to make that swap from one place to another. So let's say from Stacks BTC to Core BTC, you can just convert. In a second phase, I actually want to even abstract that away from the user. And with intents, that's very possible, where you say, look, I want to swap my Stacks BTC into Core BTC and immediately deploy that into this borrowing lending protocol on Core. And for a user, that should be one click. And that's basically our B2B2C strategy, as I call it. It's, of course, a B2C product to start off with, so people can see what the power is of these intents and how to switch around chains. But eventually, it's a B2B product in terms of scalability. We need to kind of be integrated with different protocols to enable them to accept any form of BTC, like whatever like chain you have it on. It's in a way similar, as I compare it sometimes to like paying with your credit card somewhere. You have USD in your bank account, but you're traveling in Europe, you need to pay in Europe. You don't need to manually swap your USD for euros. It happens in the background. And I think the same should be true for Bitcoin.
Blockmates Orange is sponsored by Core Network, the ultimate Bitcoin-powered EVM-compatible blockchain. Learn more about Core at blockmates.com.
Welcome back, everyone. Another episode of Blockmates Orange, where we focus on Bitcoin and EVM and how the two meet. Today's guest is the CEO of Persistence One. Jeroen, welcome. Persistence One we've covered before. We wrote about it in April of this year. Started out on Cosmos, liquid restaking protocol, and now moving into Bitcoin and doing stuff in the liquid restaking space in Bitcoin. So without much more to add to that, let Jeroen kind of do an intro in terms of who he is and obviously what it is that they're doing. Welcome, sir.
Hello, Jim. Thank you so much for having me. I'm very honored to be here. So hi everyone. My name is Jeroen. I'm the CEO of Persistence One. With Persistence, we're actually in a very short note. We're building a Bitcoin cross-chain swaps product across Bitcoin L2s. So slightly different from the liquid staking, restaking thing that we did before. And I'll get into the details later. I can explain in more detail, like where we come from and like where we're going. But so we're focused on building an intent-based Bitcoin bridge, basically. We do that to facilitate interoperability between Bitcoin L2s and kind of solve the issue of fragmentation that is there in the Bitcoin ecosystem, or Bitcoin DeFi ecosystem, that is growing quite strongly as of lately. A little bit about myself. So my background, I graduated as a business engineer 2010 from the University of Leuven in Belgium. Kind of started my career in finance and consulting. So did a bunch of work for a bunch of banks across the world, actually. So lived in Belgium, lived in Paris, lived in Singapore for that. Kind of got rid of, or kind of bored of the corporate life a little bit. So joined a fashion tech startup. So worked as the GM of a fashion tech startup in Singapore, where we built pretty cool stuff, but it's like automation of fashion tech. So that was an interesting stint. Did that for about 5 years, and then got kind of drawn into crypto more and more over time. Joined Persistence One about 3 years ago, where I've been playing different roles. Basically got to know the company, got to know the products that we're building, and kind of been across the board and involved in many different ways until the position I am in now. So it's been a great journey so far, and happy to talk more about anything of that here.
Yeah, great, man. I think just to kick it off, like I'm super interested in obviously, the origin story of Persistence and also like what happened like for you guys and deciding to obviously do what it is that you're doing right now. And it's obviously quite a shift, right, in terms of being very much active on Cosmos and doing a whole lot of stuff there, and now looking at Bitcoin. So give us a little bit of history and what the motivation was for Bitcoin.
Absolutely. So I myself joined in 21, but actually Persistence started a couple of years before that. I think 2019 actually started working on Persistence. Back in the days, the idea for Persistence was actually to solve an issue around real world assets. It's kind of bringing like bills of lading onto the chain and use that in forms of collateral and stuff. But that was way ahead of its time. That was like 5 years too early. I think now we see those things kicking off. There are actually some projects doing similar things now, and they start to get some traction now. But we were like, I mean, or they were before I joined, 5 years too early. So quite quickly realized during that like proof of stake was a very interesting thing. That was also when the Cosmos Hub launched around that time. We actually helped to launch the Cosmos Hub with by running by running a validator there, and got really close to the Cosmos ecosystem back then, and learned a lot about proof of stake. And basically, we're kind of full in on the innovation there, and we launched Persistence Chain back then. Because also we were looking at liquid staking back in that time. That was like the next innovation of proof of stake. And so it evolved a little bit into that direction where we were building an ecosystem around liquid staking, because we believe that in a way liquid stake tokens will kind of be the default tokens of DeFi in a way, because it makes more sense to use liquid stake tokens which are yield generating rather than just the plain and simple form of the token where there's no yield, right? So that was the idea back then. So we've built an ecosystem around that. Out of that ecosystem, one of our sister projects came, which is called P-Stake Finance. We're often still confused between P-Stake Finance and Persistence, but so P-Stake Finance started on top of the Persistence chain, but then grew wider because they also realized within Cosmos there's limited growth for liquid staking, and they started to look at alternative ecosystems. So they started to build outside of liquid staking for Atom. They built like liquid staking for BNB as well, and now more recently started building liquid staking for BTC, which is their main focus at the moment. Now, in the meantime, we on the Persistence side, we tried to build an ecosystem around liquid staked assets. So we also had a DEX, have a DEX actually, the DEX, which is specialized in a way in trading liquid staked assets. So these pools are very optimized for trading pegged assets that are related. There was a platform in the making for like borrowing lending actually on top of the Persistence chain. But what we realized was that, look, Cosmos, ever since the Terra collapse, hasn't been doing so well. So we've been building into Cosmos since the beginning. Tech has always been great. It grew quite well. I think we did decently well. At some point, we got like through our validator service, we got more than $1 billion in assets like staked as part of our stake drop campaign, which launched the Persistence chain. So I think did quite well in that time. But everything post Terra, feel like Cosmos hasn't really recovered from that liquidity crunch, and so it's a bit of an uphill battle to really fight within Cosmos, try and attract more users there, try to find liquidity for these things. And we figured, look, we're in a way all Bitcoiners at heart, whoever is working with us, because that's kind of the main asset and the original asset in the industry. And we realized, look, if we want to actually try and take our talent elsewhere than a Cosmos ecosystem, what would be a good ecosystem to build for? And it didn't take long to figure out, look, Bitcoin, especially now with this kind of Bitcoin renaissance that is going on with all these BTC L2s coming up, different projects that are generating yield on top of Bitcoin, it would be a great bet for us to actually take our talent with respects to interoperability, to trading, to the Bitcoin ecosystem as well, and basically build a solution there that solves the problem of fragmentation that we saw arise at that time. That was a bit earlier this year. So that's kind of pretty long story, but that's how we got into Bitcoin and how we are working on the Bitcoin fragmentation problem right now.
Yeah, I mean that's a really interesting story, and obviously agreed. I mean, obviously we're having this kind of like almost reinvention of Bitcoin. Well, not exactly a reinvention, but a realization that Bitcoin can be more than just a savings account. But there's collateral based yield generation based opportunities. I want to get into kind of like that mindset of, like if you look at a Bitcoin Maxis perspective around, not your keys, not your coins, and this whole kind of like fear-based, and rightfully so, philosophy and mindset that says you don't hand over your Bitcoin because you do stand a chance of losing it. And we do know that there are risks in the space, but let's just put that aside and just look at kind of like the pure ethos, or rather the ethos that kind of gives the purists that perspective. Has this been kind of like one of the biggest challenges that you guys have faced in terms of building, first of all, bridges, which are obviously, they have the stigma that's associated with them. And then, secondly, like, how do you overcome, that kind of mindset with building a product like that?
Yeah, no, absolutely. And I think what you mentioned is very accurate in terms of like Bitcoiners. They don't want to part with their Bitcoin. It's like, don't sell Bitcoin ever. Don't put it on a centralized exchange. You custody it yourself. I think all of these are a big part of the ethos of Bitcoin, and I'm aligned with those as well. And I think it's one of the main hurdles of adoption as well on the Bitcoin side. Whereas on the Ethereum side, I think that has been slightly different just because you have that programmability on the Ethereum blockchain itself. Now, on the Bitcoin side, Bitcoin is not programmable in such a way. Obviously, there's like some innovations since the Taproot upgrade, and you have like runes and ordinals now on Bitcoin, which is interesting, but it's not as far yet as you can't really call it a full developer platform of sorts, right? And I think with that, there is that realization that I mean, of course this can change potentially, like depending on like how it evolves, but I do think everyone has kind of come to realize, look, if we want to scale Bitcoin, it's going to have to be on L2s and side chains, and each of these L2s and side chains, they will come with different risk assumptions and like different ways of operating that bridge typically, which would be needed between Bitcoin and between the L2. First of all, for the asset itself, so if that L2 wants to hold or wants to have Bitcoin that is usable in DeFi, it will need to have some form of a bridge in which BTC get locked on the L1 and a new form of BTC is minted on the L2. So how that mechanism works, there's a lot of security assumptions being taken there, and every project kind of takes different assumptions and approaches. So that's already quite confusing, I think, for users, but there is that security trade-off, which eventually people who want to participate in DeFi will have to do their research and see what asset are they comfortable with, or what L2 are they comfortable with. I think that's one. Then obviously you have the second part. So besides the actual the bridge, you have the borrowing of security from Bitcoin, the asset and the security of the proof of work mechanism that Bitcoin has. Some of them opt to have, like, you have merge mining of Bitcoin, right? But you also have others that are just a side chain in a way. They have security from another token or their own token or even Ethereum for that matter. So all these are like interesting assumptions, and I feel like if you want to participate in Bitcoin DeFi, at least for now, you'll have to kind of be aware of what the risks are that you take, and they will be very different, right? I do think there will at some point be possibility to have Bitcoin DeFi on Bitcoin itself on the L1. There are some projects trying to achieve that. Think of like Arch Network, for example. They're really going for that route, but it's a harder route and it will take a bit longer. So I think that answers kind of your first question, how I look at that. In terms of the second question, like what we do to overcome this in a way, and what we're building with our product, it's a way to avoid a little bit of the issue of fragmentation that is there and that's being created by everyone trying to solve in their own kind of form the problem that they're facing in terms of this bridge with the L1. We almost abstract that away because we're actually not even participating on the L1. We've kind of taken the view that every project, every L2, however they structure and however they want to be connected to the Bitcoin L1 is kind of their business. What we try to facilitate is the interoperability between all of these projects, because what we believe in is that if we want Bitcoin DeFi to be successful, we actually will have to make this a collaborative effort, and it can't be like a bunch of silos each working towards creating their biggest Bitcoin ecosystem and fighting with each other. I think they will need to be interoperable, and that's kind of what we're trying to solve. And we do transactions or bridging transactions between these L2s, make that very easy, but we don't involve the L1 even. We actually, obviously, it's an intent-based mechanism. We can go into intents a little bit later. But how it works is basically you find two people, each on like one on each side of the different transaction, and we kind of match them. So in a way, we're a marketplace for that. And because there will not be always a taker for your order, we bring in professional market makers that actually fulfill that role of a solver, similar as market makers on centralized exchanges. So yeah, that's how we look at it. We think unifying the Bitcoin fragmented ecosystem is kind of part of our mission vision.
Yeah, I mean that's super interesting because I mean I had a guest on the show who essentially what they do is that they provide a service that identifies, the different side chains for the most part, for the sake of definition and argument. Like, we have side chains, we don't really have, according to him, we don't really have like true L2s, and the distinguishing factor between the L1 and L2 slash sidechain is obviously the efficiency of the bridge, and the biggest point of kind of like risk, but more importantly, the biggest point of this highway is obviously the bridge and its ability to be able to service individuals that are wanting to actually move between the L1 and the opportunity for the sidechain and obviously settlement happening in an EVM context. In terms of your service right now, and in terms of what it is that you guys are building and facilitating for, is it to service as many of the L2 slash side chains as you guys can? So is it about having a presence in all of them, or how do you deal with kind of like that interoperable mechanism or dynamic within all the
Yeah.
different side chains that currently exist?
Yeah. So a good question. I think to begin with, there's a lot of BTC L2s. And actually, like, my definition of a BTC L2 is actually quite different from many others, because in a way, I see any chain or any L2, whether it's even an L1 or an L2, that has a solid amount of BTC in one way or another that is used actively in DeFi. I call that a BTC L2 for my
Yeah,
purpose.
yeah,
So
yeah,
if you look at, let's say, Coinbase, I think it's technically a layer two. It's not a Bitcoin layer two, but I call that, because now they have Coinbase BTC. To me, that's a BTC layer two, because Coinbase BTC will be quite important in the DeFi ecosystem of Coinbase. Even like Binance, for example, has BTCB, quite a significant amount of it. Even Ethereum has wrapped BTC. I mean, to me, all of these are kind of ecosystems where BTC will be used in DeFi. And then on top of that, you have the actual, like, the people that identify with a true BTCL2. You have like the Stacks ecosystem or Rootstock, where there's significant kind of activity expected for BTC. So those are the ones that we are looking at. I do believe, like, look, there's too many L2s already. There's like 100 plus in development. Some of them are live. I think 50 plus are already on mainnet. Um, I don't think we'll end up with 50 plus. And I think from our side, it's kind of a bit the 80-20 rule. I think 80% of the volume will kind of come from 20% of the chains. And we'll try to, in a way, cherry pick, especially in the beginning when we have limited resources, I think, like everyone. To be able to offer the chains where we expect most volume, most activity when it comes to BTC DeFi. Then potentially, like, down the line, like, even if it's like a small chain, I would not rule it out that we would service them, but potentially it would be at a fee, because maybe the organic volumes wouldn't be sufficient to cover the cost of running the infrastructure. So that's how I look at it. I think it should be open for anyone in a way to join. Obviously, the economics need to work out, I think, on all fronts.
Yeah, I mean, our podcast is essentially sponsored by the Core guys. They obviously they classify themselves as being a side chain, but I think based on your definition, they very much are an L2, in terms of the amount of Bitcoin that's currently being utilized and staked within the environment, and obviously their community and the protocols that are obviously building on Core are extensive. I mean, one of the cool things about being sponsored by someone in the space that allows us to have these discussions, even with protocols and individuals who aren't directly involved with Core, is that it's about an awareness about what people are doing. And I think, obviously what you guys are doing is critical. It's like, well, I need somebody who knows what they're doing. First of all, they've done the mileage, so to say, in the space, and understand the risks and the challenges. because there's nothing kind of like, I think in a bridging environment, I think the worst thing that could happen is for someone to start from scratch. I mean, that's just my opinion on it. I think you need the time, um,
I,
because yeah. I mean, it's like, so. I mean, one of the questions that I'd love to ask is, like, what are the risks right now, and the challenges that you guys are having to overcome, obviously on a general level and then also on a technical level, in terms of obviously addressing, I mean, every protocol has its challenges around security and risk. I'm just curious what that might be, in the context of EVM to Bitcoin and vice versa.
Yeah, no, that's a good question. I mean, I like reference to Core. They were also working with them. They will be one of the first chains that we integrate with as well. But I think before even I'm able to actually address the question in terms of like risk, I should probably dive a little bit deeper in like into how it actually works and like what the goal is. So we can use Core as an example, right? So let's say on Core you have now a bunch of opportunities to make your Bitcoin useful, right? So I think on Core you have Core BTC, right? You can deploy that into specific. Is it Core BTC or do they use Wrap BTC? I actually don't know at the moment. Um,
That's core
but
BTC, as
Core
far
BTC,
as I'm aware. Yeah.
yeah, Core BTC. So let's say they have an application, let's say a borrowing lending protocol where you can deploy core BTC. You can't deploy your Stacks BTC. You can't deploy your Coinbase BTC. You can't deploy your Binance BTC. What you would have to do if you want to actually deploy your BTC that you have on another chain, you'd have to unwrap that in a way, either through like through Stacks platform or through maybe through Coinbase or through Binance, whatever, to go to normal BTC. From there, kind of transfer it to go to core, whatever that route might be, which is quite tricky. And for a user to do that manually, I think is just too much. And of course, like in a first version of our product, we'll just have an easy interface to make that swap from one place to another. So let's say from Stacks BTC to Core BTC, you can just convert. In a second phase, I actually want to even abstract that away from the user. And with intents, that's very possible where you say, look, I want to swap my Stacks BTC into Core BTC and immediately deploy that into this borrowing lending protocol on Core. And for a user, that should be one click. And that's basically our B2B2C strategy, as I call it. It's, of course, a B2C product to start off with, so people can see what the power is of these intents and how to switch around chains. But eventually, it's a B2B product in terms of scalability. We need to kind of be integrated with different protocols to enable them to accept any form of BTC, like whatever like chain you have it on. It's in a way similar, as I compare it sometimes to like paying with your credit card somewhere. You have USD in your bank account, but you're traveling in Europe. You need to pay in Europe. You don't need to manually swap your tokens or your USD for euros. It happens in the background, and I think the same should be true for Bitcoin. Um, so that's kind of how it works in the background. Now, what's very specific about our design? It's an important like consideration on the risk side, because you mentioned rightly you don't want to like a rookie to build a bridge in a way. We actually look at it. We're not even building a bridge. That's like how different we are in a way, because we all know a bridge is just risky. A bridge, typically the lock and mint type of bridges are very like a TVL honeypot. It attracts attackers in a way, and that's for us a design we didn't want to take. So we are actually going with the approach where we believe in a world where there's so many chains and every chain will have like their own offer. It's like a multi-chain type of view. There will be a bunch of native assets, and I think we shouldn't bridge every asset to every chain. I think you have every chain will have their core native assets that are minted natively, and these should be able to be swapped around freely. And that's what we do with intent-based mechanisms. So actually, it's a zero TVL product in which if you as a user, let's say you come in and you want to swap your let's use Stacks BTC again for the example, one Stacks BTC to one core BTC, you basically just find a user that matches it on the other side. So you'll give up your one Stacks BTC to someone else, and that person basically will give you one core BTC. So the balance will remain the same. Of course, the person who takes that trade can decide to actually unwind it and kind of bring it back and like rebalance it. And typically those market makers would do that so they don't have like limited inventory on both sides. But it reduces the risk to the size of the trade. So when I say zero TVL product, it's actually limited to the size of the trade, and it's only for the amount of the trade, like of the time that the trade is happening, which is typically will be fulfilled within a second. So within 1 second, the user's risk is kind of gone. So the user has received his token on the other side. And then how the infra works is basically the infra verifies indeed that that settlement has happened, so that that user has paid. Then it waits for finality on both of the chains, and then it basically gives that one stacks BTC to the market maker who has fulfilled that intent. So the risk after the trade is actually done sits with the market maker, and he can price in that risk, right? So if it actually would take, let's say, 1 week to unwind from stacks BTC to regular BTC, the price might be higher than for a chain in which it's like a 5-minute transaction, right? And so that's why I believe that actually with our design, we'll figure out the pricing of each of these risks of each of these forms of BTC, which I think will be super interesting to see, because everyone who wants to fulfill these intents, they will price the risk accordingly. So maybe one stacks BTC will not be one core BTC, but it might trade slightly below or slightly above, depending on what the perceived risk is for that particular form of BTC. So that's how the risks like look on the actual protocol side. In terms of challenges, I mean, the main challenge for us is to create a competitive network of solvers who are willing to hold inventory on each of those chains. You'll obviously, like, the bigger the trades, the more inventory you'll need. There's multiple ways of solving that. There's like solver aggregator platforms that do that. You can even invite retail. Anyone who basically holds these assets can participate. You can even create single-sided LP pools on each of the chains to actually provide inventory to the market makers to work with. So there's plenty of solutions there, but I would say that's one of the most challenging parts, to make sure that there's enough solvers and it's a competitive marketplace, so that as a user you get good rates for your swap.
Yeah, that's really interesting. I mean, the whole intent-based approach, I mean, obviously you run the risk of not having inventory, so to say, but it's definitely safer. I mean, a lot of trading is happening as well. There's a couple of protocols that obviously have adopted that method. Kind of overcomes a lot of the liquidity challenges, provided, of course, there are holders. So that's super interesting. I didn't actually realize that you guys were focused on that dynamic, and it really does sound like a game changer. And I suppose the question would be like, are you guys front running everyone on this? Because it sounds like you're going to have quite a bit of tailwind and people doing the same thing into the future.
Yeah, I think good question. I think we're definitely early on the Bitcoin
Cool.
side. I do think in terms of intent-based bridges, we're definitely not the first. We've seen it on Ethereum. There are a few protocols that are doing really well, and I expect them to also look at Bitcoin at some point. I think we've taken the stance that we want to build for Bitcoin and we want to kind of make that our niche, and we will service BTC as the asset, and we do think actually that market is big enough alone so that we don't have to focus on everything else. And I mean, we'll definitely see competition within this market. I think for now we're the only one that is really focused on BTC and BTC variants only. We'll see how this evolves, obviously. Also, depending on the demand, might be interesting to add USDC, for example, to this. Where you say, look, we accept all forms of BTC or USDC. But I don't want to overcomplicate it either, because most of these bridges that I see, you can choose between 50 networks and you can choose between 1 million tokens. And I think it's just so complicated. I just want to keep it simple, just Bitcoin only, and maybe USDC. And I think we'll have a solid volume, because if BTC DeFi kicks off the way I expect it to be, and like if it becomes bigger than or even the same size as relatively speaking to Ethereum now, and so comparison between the assets and the volume, BTC DeFi is going to be way bigger than that. And yeah, we expect even a small how do you do estimation, like it's $500,000 in bridging volume every day. expected across different BTC L2s, which is $500 million a day is like huge, right?
Yeah, it
Uh,
is
so even if
absolutely.
we take a small portion of that, I think we'll be happy.
Yeah, I mean, it sounds like from a business perspective, it sounds like a no-brainer. But obviously, you got to build a tech, and that's why you guys are doing what it is that you're doing. Um, what I find really interesting about kind of like what we're seeing in the Bitcoin finance, BTC, DeFi, doesn't matter what you call it, is that there's a lot of players that are currently like involved, like you said earlier on, like there's several hundred in development. What do you believe will be like the main ingredients to distinguish those that survive and those that don't?
I mean, it's a good question. Tough to answer and tough to make predictions. I think in a way it's attracting, I think, developers and apps that people really need in a way. Um, I do think one of those reasons, like what people really need and want to me, is like everything that kind of brings yield. I think um, whichever like chain or ecosystem that is really focused on figuring out like how to generate like real yield, right, on Bitcoin, I think we'll have definitely a head start. Um, like there will definitely be other chains where it's all about like memes and like minting new tokens and inflation and then kind of trying to um, put it up that way. But I'm not sure that's sustainable. I think we've seen those type of plays. I think to me it's a bit going back to like the financial side of crypto and DeFi more than the gambling side. Um,
Yeah,
and of course, it's everything that's kind of decentralized properly. I think we'll have a head start, and then ideally everything that's also like scalable, right? Like, but yeah, like I think in terms of like transaction throughput, it's something that is quite important. I think for Bitcoin, can't be too slow because yeah, I mean, still have to compete with the other DeFi platforms out there, right? Um, so yeah, I mean, let's see. I think it's a hard one to predict, but I think there will be definitely some winners. And yeah, I think it will be around like how big of an ecosystem you can build, how many builders can you attract, how many interesting dApps are there, what's the capital efficiency of all these things. Yeah.
yeah, I agree. And it's going to be really interesting to see how kind of like to what extent rather the Bitcoin that is being utilized is actually used in a way that does enhance obviously yield and the collateralization. And yeah, I mean, even if it isn't gambling orientated, which I hope it isn't, because I think we've seen more than enough of that. um from a pure finance DeFi perspective, I think we need this. It's like it's almost like we've delayed it because we've been too busy kind of like playing with memes and the rest of it, which I don't necessarily have a problem with, but I don't think that in the long run, we can just do that kind of stuff, because then what the hell is the point? Like it's not like you're going to set up a bridge to try and to to bridge meme coins. It's kind of like, geez, maybe I'm going to land up eating my words on this one, but
Who
you
knows?
know
Could,
what I mean. It's like,
could be the highest volume bridge in the history, right? Like you don't
yeah,
know.
it'd be.
Yeah,
Um,
but
so
I agree.
yeah, absolutely. So I think just obviously from your business, in terms of what it is that you guys are doing, is there like an interest or a strategy to launch a token? And if you guys are, or if you aren't, like what are the reasons? What are you guys looking at kind of like for the future?
Yeah. So a good question, but we have a token that's been live and trading for almost 3.5 years
Okay.
when we launched the persistence chain. Um, and so a token is like fully vested. So we have our token there and like we have liquidity on the DEX and the chain is still running. Now, this is where the dots connect, right? And I haven't spoken about this yet because this is the next piece of the puzzle. So currently this intent-based bridge, it technically does not need the token or it does not need to be connected to the chain. There's actually other ways, and that's the way we also adopted to go to market is we use part of the layer zero tech stack when it comes to interoperability, when it comes to cross-chain communication to verify these intents. So we're starting off with using layer 0. So we're working together with them to use that. Now, in a way, the plan is to, in 2 steps actually, change from the layer 0 method to a customized logic where the persistence chain actually comes into play, where we have a lot more customization, where we also have some role for the token to come in. How this works is like layer 0, they use a certain set of like validators to use in this general message passing mechanism, which is incentivized with the layer 0 token, things like that. For us, we want to bring that to our set of validators. So we have a set of 100 validators, which we've worked with, like in a way for, I mean, obviously they've rotated, but for 3.5 years, they've been validating our chain. We've had like a bunch of activity on the chain. And we actually want to bring these validators into that product and make them validate the product rather than a set of random validators selected by the layer 0 protocol. So that's the next iteration of the product. Now, the really interesting thing here is that this is the last part of our value prop, which will be the third phase. We want to actually integrate with Babylon, and we're in talks with Babylon, who, as you might know, I'm sure, does Bitcoin staking, and they offer Bitcoin or like chain security through Bitcoin staking. So what we want to do, and we're actually trying to put this on testnet like in this week or next week, is to get security by Bitcoin stakers for the persistence chain, which would then actually secure the bridge or secure the intent-based protocol to make those transactions. So in a way, the product would be a Bitcoin swap product, intent-based, secured by Bitcoin. And then if you stake BTC, you could earn actually some XPRT rewards. XPRT is the native token, but also vice versa. If you actually stake XPRT, we could potentially, like if governance approves all these things, we could make a bunch of the BTC bridge fees go to the XPRT stakers, right? So you can have a very interesting like dynamic between the current chain, the protocol, and the actual new product that we're building. But in all honesty, we saw that it's not absolutely necessary to build that for the go-to-market initially. And our time to market is quicker if we don't, right? So we chose to not do it from the get-go, try to get product market fit, make sure that we are properly integrated everywhere, see proper traction and volumes, and then we will integrate with the persistence chain and the token potentially, if governance allows.
There's a ton of verticals there, and obviously a ton of potential fee generation events. So yeah, it sounds like a good plan. Obviously, just go and do it, I suppose. You know, it's like,
Exactly.
yeah, it sounds really exciting, and I think this whole space is very exciting. I mean, it's the reason why we started this podcast, and the more I hear founders like yourself and protocols like yourselves talking about the space, I think obviously the future is very bright. Clearly, there'll be a lot of lessons learned, a lot of mistakes will be made, but I think a lot of really cool things are happening. And you guys obviously are now walking that path. So yeah, thanks for coming on and sharing what you guys are doing. I think it's awesome and obviously very necessary in terms of getting that Bitcoin across and putting it to good use. And it sounds like you guys have a very clear plan, and wish you all the best. And maybe we'll get you on when you guys launch next year. I would assume it's next year. Hey, you guys are looking to do mainnet. What does your roadmap look like before I let you go?
Yeah. Most likely looking at early next year. Depends a bit on audits and so. Like we have actually some working stuff on testnet already. We've done some first cross-chain BTC transactions on testnet, which is very cool to see. But I still have to do the front end, integrate with the UI, things like that. So most likely, and then depending on audits, which is always hard to schedule. I think most likely looking somewhere early next year for a mainnet launch. Yeah.
Okay, well, here's wishing you guys all the best for early next year, and good luck with the build. Good luck with your partnerships. It sounds like that's going to keep you busy as well.
Yes.
And look forward to chatting to you guys in the new year. All the best, sir. Take it easy.
Thank you so much for having me. It
Thank,
was fun.
Absolute pleasure. Thanks everyone for joining us. Please like and subscribe. Obviously appreciate it. And yeah, take it easy. We'll see you guys next time.
All right, thanks for listening. If you enjoyed the show, please give us a like, subscribe, and turn the notification bell on for next time. See ya.